Good evening, everyone, and welcome to yet another weekly forum from Smartkarma. Just a little recap, we host a weekly forum on Thursdays at 5 p.m. Singapore time, and we use this forum to highlight three key ideas from across the network. Typically, we look at one small cap, one large cap, and one key thematic that has surfaced to the top using a set of data indicators that we use across the platform. And as we tend to do in each one of these forums, we open it up to the presenters, and we also open it up to the attendees for a nice Q&A and discussion. So as we wait for attendees to stream in, just taking a quick look at our disclaimer. So first of all, the forum is meant strictly for subscribers. It's purely for informational purposes. It represents the opinions of our insight providers. And lastly, but quite importantly, Chatham House rule applies, which means please do not share this on social media or any other public forum without express permission. And that's it with the rules. With that, let's look at the agenda for today. So we're going to look at three things. The first one is a small mid-cap idea listed in Hong Kong. This is a company called CPMC, and it's a very intriguing alternate consumption idea that's trading at 1/3 the valuation of its peers. We'll move on to look at a very fast-growing and interesting space in China, which is called the property management services companies, an area of secular growth and great returns. And lastly, there's a particular thematic that we will explore, which is how do Chinese banks stack up relative to rest of the market and relative to their own histories. That'll be much more of a thematic discussion. With that in mind, I'll just move on to the first idea. So this is CPMC 906 Hong Kong. As you can see, this is a $500 million market cap company. It has not done very much since 2018, and there was clearly a big sell-off from 2017 to 2018, and the business, or at least the share price, has not really recovered since then. So today we will take a very brief look at the background of the company, the key thesis, as well as catalysts. These are summarized here. So CPMC, and we will look at a bit more detail when I take you to the platform and run you through the initiation insight on this. But very, very briefly speaking, CPMC is a top 1 or 2 manufacturer of packaging in China. So this is aluminum and tin packaging. It's the sort of stuff that you buy your can of Coca-Cola in or your tuna fish in. It has been benefiting from industry consolidation as well as strategic relationships across the market. That has resulted in a very consistent pickup in profitability since 2018. They have also received a 1.5 billion RMB settlement in cash proceeds right at the end of 2020, which will be paid out as a special dividend this year. It's trading very, very cheap, just 8 to 9 times PE and well below book value, versus its peers that trade anywhere from 23 to 40 times PE. So that's the basic setup, and let's look at it in a bit more detail. So for that, I'm going to take you straight to the Smartkarma platform, and we're looking at an insight from Osbert Tang, who covers this name. So let's take a quick look. So here's just a very quick image showing the type of products it manufactures. And also just bear in mind, its key customers are all very well-known companies, Coca-Cola, Tsingtao Beer, Carlsberg, Feihe on the dairy side, Yili, etc. Also, CPMC also stands for COFCO packaging. So it has links straight through into the SOE, COFCO, and it has a nationwide geographic footprint. As Osbert notes here, this is really the largest player in several of its products and the second largest player in two-piece cans. So this is really a very, very dominant company. Thirdly, profitability is recovering. It's not recovering out of COVID, but rather it's been recovering since 2018. this recovery is as a result of several changes in the competitive dynamic. So first of all, a few foreign competitors, Ballcorp and Crown, they actually exited the market, resulting in consolidation, and that's helped the local players. Secondly, one of the local companies, ORG, used to compete very heavily on pricing with CPMC. But instead of being a competitor, they've actually now become the second largest shareholder of the company by taking a 23% stake. So that has also dramatically improved the competitive landscape in favor of the company. Thirdly, it's doing a lot of interesting things. You know, they're setting up factories within a factory, which means that the entire packaging actually happens within the factory of its customer. All of these things increase stickiness, longer contracts, but also improve profitability. Now for the icing on the cake. So in April 2020, CPMC settled a very long-term dispute that they had with a company called Chiatopal, or JDB. So JDB, just to give you a little bit of history here, JDB and CPMC had formed a joint venture together. And as part of the joint venture, JDB was going to inject a couple of its trademarks into the JV. Well, they never really did it. And as a result, CPMC started a lengthy process of arbitration, which they eventually won. Now, a direct result of this win was that in late November, CPMC received 1.5 billion renminbi. Well, that's a pretty substantial amount of money. And CPMC is expected to pay a very, very big special dividend this year. And I think that is going to be a bumper win this year. But in addition, it supports a very good cash position for the company. Now, lastly, when we look at valuation, this is a very, very cheap stock. You know, it's trading at about its long-term average price to book, despite the fact that profitability is actually improving and the competitive position is structurally better, and that comps are trading very, very rich. So that's the thesis on CPMC. We like such under-discovered names with strong parentage and great market positioning, and we continue to highlight them. These names can often remain undiscovered for periods of time, but that's a big role that the analysts on Smartkarma play. And Osbert, some of you have heard me talk about him, but he's an analyst with over 20 years experience. He's worked at a lot of big firms, and he's got a great following on the platform, and he influences all his followers through the detailed work that he does. With that, I'm going to open it up to any questions. You can use the Q&A tab on your Zoom application to ask me questions, or even the chat feature. But if you guys are still sort of warming up and want to come to the Q&A later, you can do that as well. I'm going to move on to the second idea of discussion today, which is China Property Management Services. And as we've highlighted in the title here, this is a basket approach. There's a very large number of companies that are listed in the space. There's a bit of a screenshot here. And sometimes it might be hard for you to pick who the winner would be here, but a basket of a few of these names could be a very, very good way to start. So let's look at, why this space is interesting. But first of all, before the why, let's look at what is this space. So for that, I'm just going to take you over to the platform. So there's a bunch of insights on the platform that started, all the way back in early 2020. This is March 2020, June 2020, and then much more recently in January. So this is a fairly new space when it comes to listings. But the space has existed in China since the 1980s. And what is it? This is basically a company that receives a fee from the owners of a property, typically a condo. They collect the fee from all the owners, and in exchange, they provide a bunch of management services. They maintain the public facilities, they provide security, but in China, they also tend to provide what are called value-added services. It might be dry cleaning, it might be delivery, and many such services. So this space has been growing very, very rapidly because, first of all, it's asset light, right? It's just a services business. Secondly, we all know that China has built a lot of condos, a lot of real estate over the last few years. And now these property companies are spinning off these condos into these property management service companies for the purpose of collecting this service income. Because these are asset-light businesses, they produce very high returns on capital. And also, as more and more condos come into these property management companies, the growth rates are as high as 80, 90, 100%. But why have we picked up this particular idea right now? I think a very, very big reason for that is a change in government policies. So if I bring you to this insight on the 6th of January, just a few weeks ago, basically China announced a whole new set of policy directives. They were actually written on the 25th of December, but they only got published in the first week of January. And the summary of all of these new policy measures in China was that the government wants to promote the use of technology for property management services, and they want to encourage the development of what they call community value added services. So basically, they have endorsed property management services, and they've endorsed the use of more technology to drive the usage of more and more value added services through such companies. So what are the knock-on effects? The knock-on effects is, just a lot more revenue growth and a lot more margin and a lot more bottom line. The other very, very interesting idea here is that a lot of these companies have actually, the share prices dropped quite significantly over the course of 2020, having been darlings through the first half. So if I just open the share price chart of one of these companies, one of the larger caps called Country Garden Services, you'll actually notice that the second half of 2020 saw a very sharp correction. But prior to that, these names moved up a lot. And now at the start of this year, these stocks are starting to move up quite a bit. Now, this is just one of the names. If you look at some of the other names in this particular basket, so let's go and look at a watch list of these names, you'll actually notice very different performance. So let's look at Times Neighborhood. This is one of the very fast growing names, about 90 to 100% annual growth for the next few years, and it's trading very cheap as well. But if you look at the 1 year performance of this name, it went up from about $5 all the way to $12, $13 and has halved. So there's many, many names within this list that are trading extremely cheap, which is why we were saying, look at a basket of these names, especially now that property measures are out and there's going to be push for a much more dynamic pricing mechanism for the services they provide. Okay, that's the thesis here. In terms of the watch list, you can sort of message us and we can share these watch lists with you. That's sort of a pretty fun feature on the Smartkarma platform, where you can actually build these watch lists and share them amongst yourselves or your other friends who might also be on the platform. As you can see, it's been a pretty down day for markets, and some of these names are pulling back very, very nicely. And we think this could be a very good opportunity given the 50, 60, 70, 80, 90% growth rates that they're going to have consistently for the next 3, 4, 5 years. And also very good visibility into these future contracts. So that's rare to find in a space that's this big and growing this nicely. Again, if you have questions, you can sort of stop and ask at any time. If not, I will refer you to the insights on the platform. Just search for China Property Management and you will find them. Lastly, for this week's forum, we're going to take a very brief look at Chinese banks. And I think if you have to just get up to speed very quickly, an insight from Brian Freitas is quite helpful. This is here, it's titled China Banks Moving on Up. And sort of, if we were to look at the thesis very, very briefly, what's starting to happen is we're about to enter the earnings season for the Chinese banks. And these banks have started to surprise the market with results that are better than expected. Quite precisely, these banks are reporting year-on-year growth in earnings for the year 2020. Now that's very unexpected because 2020 was the year of COVID. It was the year when these banks took on a lot of provisioning, their credit costs went up. But despite all of that, some of these banks are starting to report year-on-year growth. What that does now is it raises people's expectations around what happens this year in 2021. And the important thing is that credit costs are sitting very high. And if these banks were to start reducing them, this is the provisions that banks take against bad loans. If they were to start reducing these provisions, you're actually going to see double-digit earnings growth from the sector. Now, what's quite amazing about the sector is that A, it's a very big underweight. B, valuations are extremely low. We'll take a quick look at that in a second. And C, these stocks are very, very big. I think collectively it's more than $1 trillion of market cap. So when they start moving, it'll force funds to allocate to them. So let's just take a quick look at some of these names, right? So look at share price performances. They've really been in a downtrend for quite a period of time, and it's only towards the end of Q4 that some of these things have started to reverse, right? If I were to open up one of these charts, let's look at maybe the industry bellwether, which is ICBC. That's 1398 Hong Kong. And what I really want to show you is how have these names done in the last 5 years. So nothing really. I mean, they've just been in a downtrend, and that trend has only just perhaps started to break out, or we're testing that trend now. So that's quite interesting. The second thing is, look at the valuations. I mean, this is 5 times earnings, well below book, 5.5% dividend yield. So these are cheap stocks. They're not like the high flyer tech stocks that we've seen. If I go even further, right, let's look at Bank of China, one of the other large cap names. You'll notice that they're trading even cheaper. I mean, Bank of China is on 4 times PE, 7.5% dividend yield, really halved in the last 5 years. And despite that, this is a $100 billion market cap company. So, that sets a very, very interesting, counter consensus value opportunity around the sector. And something that we've discussed in previous forums is that investors are heavily underweight financials globally. And as such, I think the opportunity becomes even more compelling because, people really will have to consider the sector as it starts to beat and show better growth. Now, with this, I'm sort of done with the sharing of the ideas. As for the new joiners today, just a reminder, the format of the forum is, it's very two-way. It's about discussing ideas. It's about asking questions, but also it's also meant to be rapid fire and very brief. This is not when we present very elaborate, long-winded theses, but rather we just showcase you an idea and then inspire you to go back to the platform and do more research. So I've got a question coming in here from one of the attendees in Singapore. The question is there an ETF to trade the property management companies as well as the Chinese banks? Great question. For the property management companies, currently there is no ETF. So you have to sort of construct the basket yourself. However, if you guys are quite interested to find exposure, we do work with some firms who can make this basket for you, and you can invest behind it very quickly. So maybe just message me later and I can show you how you can get that basket quite easily, even for smaller sums of money. But there is no listed ETF. For the Chinese banks, yes, there is an ETF. I think I'm just going to Google and show this to you. It's CHIX US. This is Global X MSCI China Financials ETF. Now, this has a little bit more than banks in it, but it is, it's got all the right names within that ETF. So that could be a simpler way of owning a basket of these names if you don't want to pick any of them individually. With that, I'll open the floor to questions again. Great. I think that, there's no more questions coming in from the floor today, so we're gonna call it quits for the forum this week. But keep your ideas coming. What we also like to hear is if there are specific topics or themes that you want to delve into deeper, whether it's portfolio centric or more macro or previous calls. Use the Smartkarma messaging system to send those ideas to us, and then we can surface them at the next week's forum. Thank you very much and have a good week ahead. Bye-bye.